Okay. Did you create a waiting room? Or is everybody just gonna jump in?
Everybody's gonna jump in.
Jump in. Okay. Oh, there we go. Everybody's joining us. Good evening, everybody. Everybody's pouring in. We just sent that mass text message out, so. Hello, Amir. Hello, hello, hello. Welcome, everybody. Thank you for joining us tonight. Thank you for being on time. We appreciate everybody coming on time. Hello, hello, hello. I know everybody's super excited to be here. Thank you for coming. We'll wait 2 more seconds as everybody is joining us for tonight. I appreciate you. We got people that raised their hands already. We're gonna have to wait for the questions and answer, but we're gonna answer as many questions as possible. But everybody, thank you for joining us. I'm super excited too, guys. Thank you for joining us. We got Dwayne on the line. What's up, Kenneth? How you guys doing? We appreciate you guys for being here and being on time and taking your time out on your busy work day schedule. I truly appreciate it. But you know, as always, guys, we want to make sure we're able to give you guys as much free information as possible to put everybody in position to win. And I'm just glad everybody took the time out for today. We are recording this webinar. So if you registered, we will definitely be sending you out a link probably in the next 24 to 48 hours of a replay of this if you need it. So if you register, we got your name, number, and email. We're definitely going to be taking care of you. So don't worry about it. But we got I want to say this, we have a great show for you tonight. So for the next hour 15, we're going to give you as much information as possible. So yes, we're recording this, but take out your paper and pen because we got some heavy hitters tonight. We have CEO of Ladder Financial. You know my business credit plug. If you guys have taken my mentorship, Hiram is my guy. He's been super supportive of helping everybody I know get funding to fund their dreams. We have his wonderful teammate, Yuritsa, who's going to be helping us out with this live webinar. And we have Craig, big dog Craig, at Ladder Financial, always holding it down. We got the money makers in the room today. But our 2 wonderful and amazing guests for today, guys. We have Thomas, who's going to show you and teach you how to get non-collateralized lending. What does that mean, Herman? I'm trying to get into real estate. I'm trying to get into trucking. I'm trying to get into this high-risk industries. How can I get funding for this? Thomas is your guy. He is here to help you get educated on that. And then we have an amazing, amazing guest. Laura, I'm telling you, the 300 people that are in the room, they're here for Thomas, but they're definitely here for you. How do we get these cash off these cards? All right. So they're here to talk to you. Laura will be talking for the second half, but Thomas, I'm not going to waste any more time. I don't know, Hiram, if you want to give an intro real quick before Thomas goes on. We'd love to hear from you, CEO, boss. Hiram, talk to you.
Yes, indeed. Hey, guys, thank you so much for the opportunity. You guys know me. So today we're just going to do something a little different, right? Most of the time, I'm going to bring my PowerPoint presentation that based on research, based on statistics, based on a lot of things that are happening in the entrepreneurship world. However, these are a lot of the great topics that we're hearing on folks that are saying, hey, listen, Hiram, I need to purchase something. I need to purchase vehicles. I need to purchase Turo. I need to go into the space of real estate investing. I need to purchase something. But, you know, one of the most important things to ensure is that I'm not attached to a lender when it comes down to me borrowing money. So a lot of the times I'll put a PowerPoint presentation and I'll show you a slide deck and we'll teach you all the game, right? So you can get that bag. However, this time around, we got 2 great speakers that are here tonight. And I was mentioning this here a little earlier to Herman. Herman, we got some really great people that I have not been able to get on for a few months because they're busy. I mean, they're business owners, they're doing their thing and whatever the case is. But one of the most important things here tonight is you really got to take out that pen and paper, write this information down, because if you don't execute, unfortunately, these things don't, if you don't put it into play, the results of an ROI, of return on investment, it's not going to be there.
Right.
So Thomas is going to teach us how to get OPM, right? Using other people's money, which are lenders, in order for you to get the return on investment? Why should you use your own money in order to fund whatever project you have, but find yourself in a situation where, things are not happening, whatever COVID or whatever type of thing is happening? I need to be able to find the money that I need in order for me to be successful, scale, make it happen, and then find myself an exit strategy. If you want to retire before 40, 50, 60, whatever the case is, your dreams, what you can leave for your children, what needs it for your family. So we want to really display this here tonight. Pen and paper, please. Take that out. Let's start rolling. Let's start teaching, educating you, because there's a lot of secret sauce when it comes down to everything that we do. And we got some really great speakers here tonight that I think you guys are really, really going to take advantage of. So without overdue, let's go into it and get the ball rolling here. We have Craig as well. So if you see Craig, he's going to be sending out some information. If you guys have questions, he's going to be in the chat. He's going to be in your Q&A. He's going to be all over the place and making sure that he ensures that you go through, get some funding, $100,000, $300,000, or whatever the case is. And then we obviously the second half of this, we're going to have Laura. She's going to go into and break down how do we go through all the different status that we have here. So let me present my screen here tonight. So what are we going to cover here tonight? Okay. So one of the things that we are going to cover here tonight is let me bring this up again. Is how to get high limit personal non-collateralized loans and lines of credit, guys. Non-collateralized loans and lines of credit. Non-collateralized loans is the part where when you apply to a lender, this lender is not looking at the assets or anything that you are trying to purchase. If it's trucks, 3 Cascadias, I want to make $7,000 a week on each truck, or a month, $7,000 a month on each truck, and that's $21,000. We want to make sure that we find lenders that are not looking to take these vehicles away if business doesn't roll the right way. I want to purchase a whole block. Each property is approximately $200,000. I need some ARV money. I need to purchase this whole block. We get you $200,000 with Thomas' team, and then we're able to then move on and repair these things, put some carpets, fresh paint, roof. Now we got those properties ready to flip, right? That $200,000 investment that you put in now becomes a $800 million property that you're selling out of the $200,000 investment. It's a $800,000 profit. You guys follow me so far? Okay, I'm sure you are. So the other thing we are going to do is removing the lending guideline blindfold to ensure that you get approvals and not declines. With everything that we do, we want to make sure that we unveil what these lenders are blocking or not wanting to provide you information on, because you know very well, a lot of us have applied for certain things, but unfortunately, when we don't get an approval, a lot of these companies are sending you maybe a risk-based pricing or maybe an adverse action notice, okay? And this is not the kind of stuff that we want to hear. We want to have somebody live that tells us and explains to us why we cannot get you an approval. That's where our team steps in, Thomas' team steps in, and they're able to say, okay, these are the reasons why you don't and why you cannot get an approval at this point in time based on this, this, and that. So if Tom's team is able to go in and say, we can get you $300,000, you just need to liquidate these credit cards, or you need to maybe remove these inquiries, you need to bring down your utilization, we are able to work with you. Ladder Financial Group, connected with Thomas, we're able to help you and assist you. How you can utilize our proven process to obtain funding using a backdoor method. So I always love this, right? And the reason why is because if there's the ability to find out what the backdoor method is, what numbers to call, how to get the approval, you don't need a lot of these lenders. All you need to make sure is to find out and how you can get approved for them without really having to make too much connection with a live human being, okay? And of course, how to get 10, 20, and up to 50 times your highest credit limit, which a lot of us sometimes we struggle. If we got an approval right now, a lot of lenders on the next day is gonna put you on ice, maybe from 6 to 12 months, let you cool down, find out how you make your payment. They wanna look at a payment history, your utilization, and a lot of different things that they're gonna be looking for in order for them to give you the approval. So tonight's panelists, we wanna make sure that you guys know who we are, right? Hiram, you know me, been with you, seen me. We've been working on a couple of different things. Obviously, I'm in the recreation lending space, consumer funding industry since 2003. In the last 5 years, we've been trying to help out business owners and get a bunch of money and get you that bag that you need in order for you to what? Be successful, get the approval stamp, like we always see it metaphorically, and then move on to the best thing that you need to do for your business. Thomas, give a little intro to yourself, please.
I'm just going to read. No, I've like an entrepreneur for a long time. Everything I've done, I guess, over the past 15 years is revolved around credit and financing. And, I feel like it's, I used to tell people it's like the hair club for men. It's like, I lived it and now I sell it kind of thing. So I really feel like the way that we're set up is unique, which is I'm not beholden to any bank. I can go anywhere on the planet that lends money, and my incentive is to do so. And we do thousands and thousands of apps a month. I think we've done 85,000 over the past 2 years. And when you do that many, you're just going to figure out what's working and how it works. And so, we use that to go to people who are in that startup type mode usually, but it can be anybody for any reason. But I just really sympathize with that point where you've got an idea. You can't point to anything that says you're going to do this exactly this way. You're in the beginning where it's an idea, which every business starts at. We usually work with those businesses, but can work with anybody. And we go out and get them money. And if we don't succeed, then we're working for free. And if we do succeed, then we get paid. So I think it's a clean system we have. And I mean, we do it for every type of business opportunity, anything. I mean, those are the people we help get money for.
Absolutely. So guys, for you guys that don't know this, there's such a thing as high risk and restricted industries. High risk industries, you just need to fix your SIC codes and your BIN codes, right? Herman teaches this all the time, especially with Herman Dolce. You got to fix your SIC codes and your BIN codes in order for you to look successful and in order for you to look like you are working as a consultant. If you're in real estate, guys, you don't want to put in your business name, ibuyhomes.com. Not going to work, because what ends up happening is when you have 300 lenders that would loan to you, what you're going to find is that they're going to now eliminate all these 300 lenders, and maybe you're down to about 8 lenders opposed to 300. So what happens when you go from 300 to 8 lenders? They're going to now really look into, okay, what type of business you're in. You're high risk. Okay, this is happening. Restricted, unfortunately, we can't loan to anybody, or a lot of lenders cannot loan to people who are in restricted industries, because they are just restricted industries that a lot of lenders don't want to deal with, right? So what do we look at? We look at, marijuana or CBD or whatever the case is. Those lenders do not want to be, it's so much red tape. They don't want to connect and find themselves in a situation where they cannot lend to you, or find themselves in a situation that they have to now answer to maybe a district attorney or whatever the case is. So tonight, we really want to start looking into non-collateralized loans. Why? Because non-collateralized loans are the type of loans that you can get that are not attached to an asset, a collateral, or any type of lien that would be on that specific asset or whatever you're trying to purchase.
The first option.
So, Laura,
Yes,
give yourself
sir.
a little intro. I mean, you are, listen, for those of you that don't know, Laura is our accounting bookkeeper. She handles everything that we do. We do so many transactions on a monthly basis, and she handles that for us, along with Tally, Sum, and Linda, and all the team over there. So these ladies know how to really keep us in compliance. They know how to keep us with moving forward in the right direction, never a gray area. And what we're trying to do here tonight, I think you guys are going to really be really pleased with what they can do, what they've been doing for us here for the longest. So, Laura, if you can kind of give us a little bit of a rundown who you are and your team and how they can help it.
Yeah, certainly. So my name is Laura, and I work with Tallysum Inc. And we do books, and that's what we do. So you can bring us a historical shoebox full of receipts, and we can put it in order for you, get it ready for the tax man, or you can bring us something that is on an Excel spreadsheet, and we can make it so it's easier and you have to spend less time tracking it, or we can do it all for you, however you want to go forward. What I do with Tallysum is I'm really kind of the software integrations specialist. So when you're working with all these different apps on the web and on your computer and the different software that you do to do your business, sometimes they need to talk to each other, and sometimes that doesn't work so easy. And a lot of times I can help you out with that. And every client has their own banks that they use. They have their own software that they use. So there's all these different worlds coming into one realm. And what we do is we organize that for you. And we give you the tools you need to watch those bottom line numbers to know where you're going and what you need to do next to head in that direction.
Perfect. Guys, so far, how we doing? Put it in the chat, whatever you guys need. Tally some, and then we got Thomas Dion here working with us, making sure that we can get you guys some funding here tonight. So 2-part, right? Thomas is going to be able to cover things that we'll be able to get you some funding here tonight. You need 60, 100,000, 300. I mean, Thomas, what's the highest that we've been able to do here with you guys?
With one person, like 409.
Just one.
Oh, let's get it. Okay. All right, you have my full attention. You have my full attention. I'm ready to hear this. I'm ready to hear. Everybody's really surprised in the chat. Yeah, I'm surprised. That's a lot. Let's get it.
Let's get it. So Thomas, what do you got? What's the most that you've done here for us for Bella Sloan?
Say that again, sorry.
Just the highest number that you've done for us on a loan here for us for Bella Sloan.
No, I mean, I just know the company record was 409, but the reality is like, I mean, we've done what normally happens in situations where people really are onto something that can work. Is it's time to figure this out like today. And I know we've had situations where people needed, like, I mean, we've done on the business side, we did a $750,000 business line of credit at prime +5.
Right.
That's so hard to do. That's like 8% loan that you can just not pay interest on when you don't feel like it. But what normally happens, like I'm thinking of a $700,000, close to $700,000 deal. And this is what happens a lot. And a lot of people don't realize this is, we brought, this guy had an opportunity and he got it. And this is something, sometimes to get what you want, you got to do a few things that, you're not going to have to do again. He brought in his father and his sister and himself. And when you added it all up, I know we were in the 700s. And that was, we could get to that conclusion of what was sitting there for us within about 5-6 days. And then you can have that money and, if everything's perfect, between 7 and 15 days. But, I mean, I don't know. It's a powerful thing because if he did, when we're dealing with these things that are in this range of funding, people aren't doing this to make 10% on their money. They're usually, they've got the inside scoop on a house that's going to be great, or they're trucking and they know they can basically tell their boss to see you later and make 3 and 4 times what they're making right now. Or, there's something going on that's why I love this, is because I'm always hearing like what's happening and who's really turning this money quickly. They're doubling their money and such. This isn't something other than that, but those are the records. I mean, in reality, it's like, you come tell me what you want. And if you trust my incentive that if you want $1 million at 2% on a pinky promise, that's what I want to do. I want to give you what you want. I don't care. I'm going to give you the best the market will give you. And I'm going to do it like through the guise of, if you're doing 84,000 apps over 2 years, I'm sorry, you just, I'll share some of that later, but you just kind of figure out what's happening.
Absolutely. And Herman, you remember that file?
Yes,
we don't need to you don't have to get into private, we have privacy policies and all that good stuff. We don't have to get into that. Right. Name and what type of business it was.
I forgot that was you guys.
Yeah. So that's one of the things that we really want to connect with you guys. And there is money out there. Some banks are still in that cocoon phase because of COVID, but guess what? There's a lot of more lenders that are out there that are really stepping out and saying, well, we'll take advantage of these other lenders that are not loaning money. And we really have deep pockets, and our investors have deep pockets, and we're willing to loan, right? So that is the most important part of it all. So guys, I want to continue sharing this here with you guys so that you guys know where we're going for. So why banks decline more than they approve? After 2008 economic shift, Dodd-Frank requires banks to tighten lending guideline standards, right? Listen to this. After 2008, and some of you that have been with us in webinars, you guys know this. Most lenders offer only one type of funding, making it difficult to access what you need. So that means that if you go to your local credit union, if you go to your local lender, they only have one set lending standards that they cannot provide you any type of terms because they're governed by a credit union being, a member driven and a lender being investor driven. But when you try to now expand this even more, and we have 200 or 300 different types of lending ways and patterns on how to put money together, and what we in this industry call stacking. If I get you $60,000 in a term loan, if I get you $40,000 in a line of credit, and I get you $60,000 in credit cards, that is $160,000 that we got you. So how do we use this money to be able to bring this money, inject this money into the business, and now take it, drive it, and move it forward, right? So per the Bureau of Labor and Statistics, more than half of business will fail in the first 5 years or less. Why? Because there's no money available here for you in order for you to be able to invest, inject, and bring it to your business, okay? A staggering 90% of business owners agree that availability of money and funds and loans is a problem based on small business majority. And 51% of small businesses owners worry weekly, not monthly, but weekly, on how am I going to make this payment for my brick and mortar location? How am I going to make this payment for my virtual address? How am I going to make payment for this? Yeah. But if you are able to set yourself to a higher standard, take the money. The biggest problem, the biggest thing that we see sometimes, and Thomas, you can kind of concur to this, that we see is like, okay, so how much is the money going to cost me? The right question to ask is, how much is this money going to make me? Can I make 500%, 2,000%? So the questions are being asked in a different way, that we should be taking this money and then worrying about it. Let's be honest. Smart business owners will take on whatever debt is necessary in order to create this baby, and make sure that they get the money that they need in order for what? So that they can see an ROI. ROI, return on investment. OPM is other people's money. When you tie them all up together, what do you get? Results, scalability, moving forward to the next step, the next level. This is important. So let me cover one more step here for you. So even if you think that you're fundable, banks still decline. And I'd love to see it on the chat, guys. Write this down. Why do you think so many banks are declining specific profiles when they have a 750, 800 credit score? And I'll tell you why. Because even if you are fundable, most loan applications get denied because of potential fraud concerns, not because you don't qualify. So if on your credit report, you're seeing that you have about 9 different addresses that you lived in the past 2 years, a lot of lenders, because they are using artificial intelligence, they're finding out that, okay, this does not match. The information that was sent through the application process does not match their credit report. And if it doesn't match their credit report, you're going to have a machine that is going to say, raise their hand and say, unfortunately, this file looks like a fraudulent file to us. So where 80% of these applications get declined and 20% get approved because all the information on the credit report matches the trade lines, the address, the telephone number, their name shows correctly, not the third, but they have everything all in place, right? Thank you, Herman. You'll be able to take care of that for them.
Right.
But at the end of the day, lenders fight fraud by matching your company and your personal application details against other data gathering companies. Who are they? LexisNexis, Dun & Bradstreet, Experian Telescore, Small Business Financial Exchange, Equifax, check systems. Guys, I ran my check system about a year ago. And when I lived in New York, guess what? All those parking tickets that I used to get, that I was paying somebody's salary when I lived in New York City, right? And I was double parking, and the sanitation would come on Tuesdays on the right side, and then I had to move my vehicle on the left. On Thursday, I had to move it on the right. Guys, all that information is gathered by a lot of these companies, that a lot of these lenders use this information to fight against fraud. So if my information does not match on my credit report, well, guess what? A robotic system will pick up on these details, and guess what? Unfortunately, my application got declined. And that's what we see a lot of times. Am I still good here, Craig? Am I right? So the point is that if you have your information in place, in line, in order, then you have everything that you need, the pedigree that a lot of these lenders are looking for in order for them to give you what? The stamp that says what? Approved, right? So let's look at this here a little more in details, right? Thomas, give us a little more details on this here, because I think it's very important that people understand that there's a lot more than just saying, okay, I have a 750 credit score. I have a 750, but my trade lines or my time on the credit report or whatever the case is, I went through credit restoration. This is not, you know, I should be at a certain place.
You know, I think that's the thing is there's different banks. There's banks, and it is more of your fintech stuff where the humans don't get involved as much. So if you're just not checking these boxes, it's not gonna, you need to know if you check those boxes before you go knock on their door. Okay. But no matter what it is, it's like, you know, banks want to make money, and this isn't like crazy. This is very common sense. You know, banks want to lend to somebody who has a history of borrowing and repaying money. I mean, you can be a kid out of college and get 2 Capital One cards and have a 750 credit score. That doesn't mean the bank wants to drop 400 G's on you. You know, like nobody wants to be the first guy in the pool. So what's super important about that is like, the process that we go through here for most of our clients, they are going to be in a better spot to get loans. You know, I can sometimes get people with a 670, you know, and a brand new company, a lot more money than someone with a 750, because banks want to look at a report and see a history of borrowing and repaying money, because they're looking at that and going, hey, I'm making money off these people. The thing is like, I really wanted to tell you about this. I just 20 minutes ago, a guy across the office there, you know, he literally said, you know, we're dealing with all these different banks. He's like, I'll just say bank A and bank B. He's like, they're giving out money right now, you know, and they go through these cycles where they give out a lot of money because they're, like I say, their portfolio it's like, it's too tight, and they start giving out money, and that's when you want to hit them up. So, you know, if you know all that stuff, what you're going to end up with just even 6 or 12 months down the road is a credit report of a history of borrowing and repaying money. They're not stupid. They've got billions of dollars to figure this out. They want to lend to people who have a likelihood of paying them back and have a track record of doing it. So, you know, these banks, right, that I'm just talking about, it's single digit interest rates, monthly payments, 5 and 7 and, you know, sometimes 3-year terms. And it's like, if with the ideas that most of our clients are coming to us with, like, oh, that's a moot point. You know, you should be taking this money and killing something with it, you know? So I think that the people that are getting money are not just manipulating their credit score as much as they're, you know, sometimes plant watering and waiting. You know, it's like, you know, even if, you know, 6 and 12, like when I have these new kids come in here and they have no history, you know, I'm like, hey, look, you want to turn around in 6 months and be in the same spot, or you want to start you know, let's get this thing fixed. And, you know, I think a lot of times there's a huge misconception of like people's credit, but people do not understand their credit. If they understood their credit, I think your average person would have 2 and 3 and 5 times their net worth, because you need to show banks that you can borrow and repay money. And that's who's getting the money, man. It's not, there's no other magical thing. It's basically, you know, hey, Mr. Bank, you can make your $5 a month off me. I'm going to go flip this house and make $100,000 kind of deal.
Exactly. Perfect. So as far as anything is concerned, right, we have the ability to borrow money, non-collateralized. What is out there? Yeah. Non-collateralized means that we don't have to attach an asset to it. Yeah. What lenders are out there? Either credit unions, big banks, small banks, Midwest, whatever.
When the rubber hits the road, you know, Mark Cuban isn't going to be talking to us. So yes, you've got just a few options here. And it's not even, like I said, it's not even the bank. It's where that bank is at right now. And it just it literally just happened 30 minutes before this webinar. Like, we're like, this guy's back on. So you really need to know who's on. But you've got the fintech situation, which they can offer, you know, they can offer quick stuff, like with, you know, and give you, they're very quick and whatever, but they don't have an army of people like sitting there trying to figure out nobody cares about your idea. They're basically, you're either hitting their algorithm right, the artificial intelligence, as you say, or you're not. And so when you have to tell more of a story, the credit unions are where you want to be. But even there, it's like, you just need to know who's working. So, my thing is banks, the secret is like, there's a lot of, I'm telling you, I wouldn't go to a bank and ask for money as Bob Smith, from Bob Smith's trucking, I wouldn't do that. I'd go to the bank and be like, I'm the operations manager for ABC Trucking. Little things like that. If you just think about it, it's the same thing, because you're operating the place. Little tweaks like that make a big difference, but they want to see someone that's established. And if you're not, let's just get established, or let's find someone that is, which is literally 20 to 25% of my business. I don't even fund the entrepreneur. I was an entrepreneur. Entrepreneurs have entrepreneur credit, and I've had it. And plenty of them. What we do is we just find a credit partner or a co-signer. I mean, that's what happens a lot of times. We find someone like that believes in them. I think those are the safest loans on the planet, because, you've got mom or your spouse involved. And that's, I don't know, when I step back and look at, hey, who's getting money? It's people with a history. They usually have a 6, we always say 680 score. There's 2 factors and and I'm talking about startups right now. When you're a startup and you can't point to a business tax return that makes you look like you know what you're doing, that's fine. Every business on the planet's been in that situation. Google was there at one point, right? So, when you're in that situation, it's the better your credit, the more kind of, your income situation doesn't have to be so odd. But when you have a super solid income situation, or somebody in your life does, by the way, you're in a good spot, because super solid income situations can negate credit situations, but they usually just have people that have a mixture of stuff. They have an installment loan for a car, they have a credit card. They have a couple credit cards, they've talked, if people on this webinar aren't asking, calling their credit card companies and asking them for a credit limit increase every so often, as long as there's no inquiry, then I just think, that's worth a 5-minute call. You want to keep building a credit report that doesn't look like when they give you the money, you run to Mexico and go crazy. Like they want to lend to people like that, and they want to lend to people that, like have done it before. That's the biggest thing, so it's like, I talk to a lot of young people. I'm like, man, just figure this out today. Because if you're an entrepreneur and you're like this, you're going to see stuff your whole life that you're going to know you can make $1 on. And you want to be able to reach over. The guy that I was just talking to, not really an entrepreneur, but he's learned this game. He's got $400,000. He literally has $400,000 in unsecured money that cost him nothing. He won't even pay a yearly fee for anything. And if he wants to grab 400 grand, he can do it like that. And he's in this business, but everybody should try to be working to get in that situation. And the people that can get money right now, we need to just get in here and figure out how do we get money today, which is, you've got a credit report that shows you've done it before, or like 25% of the people, somebody that looks good on paper, so.
Perfect. Now, one question I do have here for you, which is a lot of times we get the questions, Hiram, AGI versus W-2. So adjusted gross income, that means if you are a business owner, right? You are a business owner, and that means that you made income and revenue from a business. And at the end of the year, and then Laura, we'll cover this later, but at the end of the year, your accountant will say, okay, here's your adjusted gross income, either on a Schedule C or on a K1 or some sort of distribution. So what is usually what lenders are looking for? Is it the W-2, or is it that adjusted gross income for business? And what are the differences between, okay, W-2 income is $40,000 minimum per year, 60,000, and is it AGI 40,000 minimum, $100,000 minimum? What are the facts?
Well, and this is, I hate this, but again, like I go wherever the money's at, and banks want to lend to W-2 whistle while you work people. They don't. Entrepreneurs are out there. It doesn't mean we don't get money for everybody, but when you really get those, when you really do well, you're basically, our best client works for a a company that's been established and around, and they have and they hopefully call me before they quit. I hate when they call me the day after they quit, because when you go in there with that, you look good. You look like you're someone who, I just don't like, it's like it looks like you're just, borrowing and repaying money all the time. If you go in there looking like an entrepreneur, it's still doable. Everybody does it, but it's just not as good. So, but when you go in there with adjusted gross income, you're automatically telling them entrepreneur. And I just think maybe it's a little bit of my biases being rejected so much as an entrepreneur, but I'll take W-2 any day. And it's really not a formula as much. We say 2.5 to 3 times of what your credit report says your bills are. They don't care about your bills that aren't on your credit report. If you show W-2 money of that, you're in a good spot. Middle to upper 6s are okay if you can show good W-2 money. On the adjusted gross income side, not the end of the world, but yeah, you can still do it. They're going to want to see the same thing. I just think you need to put the applications better together and kind of give them what you want or what they want, because in the end, a personal guarantee really isn't that big of a deal, in my opinion, if you've got the upside of, I've got this idea in this business that I really want to do. And if you're doing that, they put the polish on the apple. We should put the polish on the apple. So that's the income you need. If some of the places I get the most money, I'm telling you, I'm helping out a friend or a family member that's not necessarily, it's a credit partner or a co-signer, and they're the ones they've got the W-2 gig. And then you're going out and you're getting this money, no prepayment penalties. They're not, even if I was a business owner and I could get something where I have weekly or payments shoved all into 1 year, or I could just get my wife to get me a 5-year loan at 8% with no prepayment penalty. I don't care. That's what I'm doing. That's what I did, So I don't know. I think if you have the 680 type score, you can come and figure out what you can get without an inquiry, without paying $1. You can have the experience of 84,000 apps over the past 2 years and at least figure out like a path forward, because there's no like list of people who just can't get money. I don't care. Like there's a lot of times, I think a lot of the people that, if you've got a 670 score and you've got $5,000 worth of credit card limits and you've got $4,000 or $5,000 on them, you don't realize it, but you have a 750 score. That utilization is killing you. And there's plenty of times where I balance transfer that to the wife, or even to yourself with a little window where it's not really on the report, but right. Whatever, you get that off your report. And for every point you go down in utilization, like if you've got $1,000 credit, I've seen people with $1,000 credit card with $1,000 on it. And I'm like, pay that off. We go up 100 points. All of a sudden we can't finance a stick of gum to here's 150 grand. I've seen it happen way too many times. And we kind of do those things, those are the things you need to figure out and do. Especially if you've got a big prize at the end, So I think you need to slow down and not just go out and play inquiry roulette, as I call it, where you're just going to these banks and hoping and praying. You kind of need to have a little bit of a plan. If the opportunity cost of not getting the money, like you were talking about earlier, if the opportunity cost, which is sometimes not just money, or it's not just this next year, it's living a different life where, nobody gets to tell you what to do. For me, that's what started it, so it's like, if the opportunity cost of not getting this thing up and rolling, it should far supersede, the difference between an 8% loan and a 10% loan or whatever, it's this should be about getting up and getting out and going.
Got it.
Real quick, Tom, because a lot of people, when you said the W-2 funding, a lot of people put that in the chat. He's like, hey, I got a brand new LLC, but I got a W-2. Now, can you give some data points or some examples of somebody who has a W-2 and they got a LLC that's under 2 years or over 2 years? What does that look like for them? possible funding?
Well, again, if anything you're doing, and I'm just going to shoot you straight here, if anything you're doing is letting the bank know you're in entrepreneur mode, you're not killing yourself, but you're going down a notch.
Right.
And I've seen people do it to say, where I tell them, like, it's like going to a job interview with clown shoes on. You know, you can't walk into a place and say, hey, I'm going to go make some money. I can't prove it yet. Or even worse, I'm losing money because here's my tax return, because that's what, it doesn't matter what you say, you know, that's what, you know, if your business tax return isn't making money, then what is it? You just basically put a flag on yourself saying I'm a little more risky, and you're going to personally guarantee all this stuff anyway. If the fear that would get out of, you know, people fear using their own credit. I don't understand why. I really don't. Like, it is the only asset if you don't have cash flow or collateral, which, by the way, I don't want to use. If I can use my pinky, I call it a pinky promise, you know, like unsecured is where I want to be. You know, I'm sorry, but it is. That's OPM as good as it gets. They hand you money, and if you don't pay it, they can't take, you know, whatever. So the LLC and stuff, I mean, for me, yes, there's ways to get money there and whatever. But what I would advise someone to do is, like, don't even bring it up right now until that LLC makes a bunch of money. Like, let's just get the money flowing. You know, that's what I would say. But we take people, you know, when you have those higher credit scores, they get 750. I mean, up there, they'll lend if you just personally guarantee it, which every business loan does until you're super up there, you know, they don't care. What they're doing is stamping a business name on a credit card or something like that to make you, you know, feel a certain way. But in the end, you're just personally guaranteeing it. And you know what? There's a huge benefit for that. I come from real estate, and as much as you can keep, you know, we wanted to keep money off of our payments off of our monthly reports, right? So our debt to income could look good, and we could keep getting, you know, 30-year type loans. And there's a lot of instances where that's really good to keep money off, to keep the payments off your report. But in my experience, I think people are afraid of the boogeyman. Because I can tell you right now, that guy with $400,000 worth of credit cards over there has an 805 credit score. And that's a fact. And it's like, you can have your cake and eat it too. I don't see why we don't do that more. But I would keep my, you know, it just depends on where they're at in the situation. When that business starts making money and doing stuff, and we can point to something, let's talk about it more. You can do it either way. I usually deal with people who want every dollar they can get their hands on. You know, and, you know, what all we will ever do is give you your options, hopefully believable, because, again, I want to get you $1 million at 2% with a pinky promise. You know, I want to give you what you want. That's what works for me. You know, give you your options, and then you decide what you want to do.
So Thomas, one of the things here that I think I like a lot, right? We submitted a guy here over to you 1 day ago. And guys, I put that in the chat. And what we have here, Thomas' team was able to get $150,000 if they have verifiable income of $40,000 a year. And this is what Thomas was talking about a little earlier, that if you got that W-2 income, right, a company, a bank is going to look into a W-2 income that's more stable than sometimes what we can find if they were somebody that were on their own and not generating revenue. So on a $40,000 income, we can get $100,000 to $200,000 in a combination of installment loans, lines of credit, and/or cards if they want, right? If that income is not provable at $40,000 because they have maybe a lesser paying job, then we can get $20,000 to $40,000. Guys, this is huge. So these are some of the examples of what we can do here for you to ensure that you get the amount of funding that you need in order for you to enter into business, leave that 9-to-5 grind, and continue now generating the revenue that you need to do on your own. One of the things that we also look at is that if we get your loan right now that it's in the personal space, what ends up happening is that we can consider a 6-month or a 12th month and do some sort of asset balance transfer or a transfer liability, and now apply for certain loans that are business only generated revenue, business only collateral, or collateral would be a fleet of 10 trucks. Now, credit would be the business credit, which you're Dun and Bradstreet, you're IntelliScore, and your smart business. Then we can also consider the type of things that the business is generating. Revenue, which is cash flow. The 3 C's, what we call cash flow, credit, or collateral. One of the 3 C's, you can get an approval based on that. If you don't have the cash flow, then you have collateral. If you don't have collateral, you have credit. And that is one of the most important things that we have to look at and evaluate on any type of business to ensure that this business is moving in the right direction. If you are not considering on moving in a direction where you are now the owner and operator, CEO, principal of this company, and banks are asking you now, let me look at your financials, you don't have that. Make sure that you have that stability in place in order for you to do what? Get yourself where you need to get to in order for the business, the lenders to be able to qualify you for more. So Thomas, if one more thing here before we let you go, you're an important man. You got a lot of things to handle. You got a big team. Talk to us a little about credit card liquidation and how you've used it in the past when it comes down to purchasing real estate, B&Bs, REI, Toro, any type of non-collateralized assets or lending.
Yeah, I mean, personally, like for me, if there's no way I want to put up any collateral if I don't have to. I mean, that doesn't make any sense, Mm-hmm. And the way to do that is to just maintain a decent credit report of borrowing and repaying money, right? And I only use credit cards. I mean, honestly, I would do it the same way I did it. When I got into flipping houses, between me and my wife, we had about $380,000 worth of credit cards limits. And it's really what kind of got me into this business, because I've just calculated what I was paying in hard money, still worth it, still making money. But I mean, these credit cards are giving me 0% for 20 months. And so I was thinking, wait, I found out a way to cash them out. I found several banks. And you can cash out any credit card. And what happens is people have a gut reaction to that. And they think that's a high interest rate. I would pay these high interest rates for about 72 hours. I'd pay about $18 in cash advance rates. I had a credit card that I could cash out for no fee or anything. I could transfer money from the credit card to my checking account, right? So now I have 2 things. I have a checking account with 20 grand in it, and I have a credit card that's at cash advance interest rates with 20 grand in debt. Then I would call credit card number 2, right? Basically the second credit card, who was offering 0% for 20 months. And I would say, hey, let's pay off credit card number 1. And they would pay it off. And that debt would now go from the cash advance rate to a 0% for 20 months rate. So now I've got 20 grand in my bank account and 20 grand at 0%. The second that happened, I said, what to hell with this? This is what I'm doing. And we just went gang. And I would cash out that same credit card again. They would let me cash it out again. And then I would transfer to another credit card. The end byproduct of that is I would have a chunk of money that I could walk down to the bank and grab, or pay one of these contractors, obviously, or I would go buy the house cash. I was buying $50,000 and $60,000 houses, where if you buy a $60,000 house with a hard money guy, in the end, the HUD statement, if you're familiar, it's like 72 grand magically. But when you go up there with cash, you owe them $61,000. I consider all them points. I don't know where that money goes into 18 different places. And that was pissing me off, honestly. So I would go buy the house cash, beat out all the other investors who are like worrying the realtor about they love cash offers. So we just kept doing that to the tune where I would have 350,000, 370. I would never go over the credit limit. I don't go $1 over the credit limit. What I would do is run it up to 99%. And I would take one bank account, because everybody gets scared about like all these payments. It's just slow down and think about it. I would take one bank account, leave 20 G's in it, and I would put all my automatic payments to that account, all principal only payments, not paying any interest. And I would just use that cash over there. And I found out pretty quick I didn't need that cash anymore, because I was doing pretty good I was flipping. This was back when flipping houses was, it was pretty easy. So, You can liquidate cards several ways. The secret, in my opinion, to liquidating cards and really beating the bank at their own game and kind of using those people who do pay 20 and 25% interest. The reason a credit card company can give you 0% for 20 months is somebody is paying the big bucks, right? So I would basically use 0% cards and a cash out method. There's other ways to cash out. I think you have somebody else here, because there's other ways to cash out. And the reality is, you know, I was personally paying 3.5%, 4% interest, but I mean, honestly, man, if you're buying houses cash, I don't care if you're paying 10%, you should be killing it. It should look stupid, you know? So you cash out a card, even if it's a high interest rate, don't get scared, pay it off with another card and use it like that. My credit score would, because I had a credit repair company before this, it would go from a 760 to 730, maybe. I say me, it's really me and my credit partner, my wife. It would go down to a 650, and everybody gets scared there and they don't realize that's nothing to fear. I could sell those houses on a Monday, pay that credit card off on a Tuesday, force my credit report to rapid update, or either way, it's like within a month, I'm back at a 780 credit score. What people don't realize is once you take on that debt and pay it off, your credit, that's how you will get to the high eights. I mean, to the high sevens, the low eights. So that's how I liquidated them. What I just get passionate about here is like, you actually can do that and have better credit. You know, like you can use a lot of credit cards and have better credit. I just think it's crazy. So that's how I did it, but I don't care how else you do it. Some banks will give you a check that you can just write your business. And, you know, that's at a high interest rate. Well, now let's pay off that credit card with 0%. If you do strategies like that, I had one entrepreneur, man, I had his brother, his uncle, his sister, he had almost $1 million in flipping money, you know, and I can just tell you, I used to have right here a stack. I mean, once you have that many credit cards and you're balance transferring, you are in the system as Mr. or Mrs. Balance Transfer. I could have done it indefinitely. I would have to pay a 3 or 4% fee to balance transfer, but damn, it's 20 months, you know, or 18 months. If you're following me, I don't know if but you know, they would just always send me these balance transfer options, no payments till March of 2022. You know how they do. So for me, I would always do that. The reality is like everybody here, if they're persistent enough, at some point, you don't need to play these tricks, you know, like the whole goal is to get to the point where we have cash. And that's kind of how it went down. I mean, you know, I wasn't paying that money to hard money, and it really worked. And it all came from credit cards. The reality is if I had to do it again, I wouldn't even take an installment loan. You know, I would just, you know, beat them at their own game. And I like credit cards. I love them. So that's how I did it. But I know there's other ways and they all work, and who cares? It's money. Let's take money and make money kind of deal.
Got it. Now, one more thing before we let you go. High utilization. So there's some folks that have the credit cards. They have maybe you know, anywhere from $20,000 to $100,000 in credit cards. High utilization. Can they qualify for term loans and lines of credit?
Yeah, I mean, to me, high utilization is the best bad credit ever. Like I just explained, I mean, and I'm just, this literally happens in my own particular situation. You know, when you're over, utilization is the biggest thing affecting your credit score. So there's a lot of people that I've had multiple employees in the past year where I said, okay, what you've done here is you've run your utilization up. Then they're out trying to get money, and entrepreneurs do this. They run up their credit card, then they go out and try to get money, right? And they get stuck. But the reality is they don't understand. The minute, you know, when an application goes through a bank, you are what you are at that moment. At that moment, you're not your history. Like, so that's why I could pay my credit cards off on a Monday, and by Friday, literally have 125 point better score. It's like night and day. You go from not financing a stick of gum to now they'll give you like the best deals they're giving. So like really pay attention to your utilization rate. I've sold most of my houses, or I've dealt with a lot of people where they just don't, they actually think having a lot of credit cards is going to hurt their score. But what you want, what I did with my employees here that got into this spot, we would go get them one loan, pay their credit card. I don't care what the interest rate is. I don't give a damn if it's 30%. We'd pay their credit cards off. Their score, for every point in utilization you go down, you're going up a point in score. So if you have $1,000 card and there's $1,000 on it, you pay it off. If you're in that 650 range, you're going to be a 750. You're actually going to be about a 760. Then we go to the banks and we get more credit cards. And I tell them, don't, I said, the next time you run up $1,000, these guys actually had about 20. Next time you run up 20 grand, you're going to be 10% utilized because you're going to have $200,000 worth of cards, like do not run your cards up to their limits. That makes you look desperate. That makes you look like you're maxing out. That scares the hell out of the bank and the credit system. So I think, if people need to separate why their credit's a problem. And when somebody comes in with a high utilization rate, we will work with them. We will help them get a first loan and pay it down. And we will figure out when the credit cards update. And there's little tricks like that, it's almost sad because it's the difference between someone going down an entrepreneur path where, 5 years from now, it's like, this isn't, they're in a whole different, very much more productive for society situation versus they went to the one bank that wasn't lending right now. And they had $1,000 on their $1,000 credit card. And they jumped to the conclusion that they were screwed. That irks me. So you have to separate why you're not getting what you want based on your credit to get to the point where you have money, to get to the point where you get down the road where you can show that you have a business that makes money. And that's why we're doing this, pay attention to utilization rate. Don't worry about inquiries. That's how I'd leave it, with people.
Excellent. Thank you so much for that. You're on mute, Hiram.
Oh. All right. Opa Gangnam Style. So Thomas, a lot of great gems, a lot of great secret sauce. Right now, Craig is going to be dropping off the link. If you guys want to get either a pay down loan for your credit cards to lower down the utilization, you can start qualifying for better credit, higher limits, term loans, lines of credit, credit card stacking, whatever the case is. Work with us. We'll be more than happy to assist you and get you to the next level. It's all about executing. I hope you guys wrote down some really good details. What we have right now, Thomas, we thank you so much for the opportunity. We'll be connecting here with you right now. Craig is going to be sending out the link. So if you guys want to fill out to get some funding, right? We want to get some funding right now. We need to purchase those 3 trucks, those Cascadias, those W900Ls, those 379s, right? Those sleepers. You want to do OTR? You want to do whatever it is. We had one lady that went through you, Thomas, and she was able to get her e-commerce store for hair products. So we want to make sure that we have you all taken care of, and these clients that are looking for some money, we want to get them going here. So click on the link. Herman, I'm not sure if you can share that link so that if they want to get some funding, we can talk to the team, or the link that Craig has sent. You guys can fill out the application, and then our team will be reaching out here to you to go over your approval. But Thomas, we thank you for the opportunity. Thank you for everything. We're truly appreciative here. And then we have Laura that'll be coming up here next, and we'll get the ball rolling here.
Okay, excellent. So guys, again, you heard what Thomas says. You got the high utilization. Fill out the app. Let's see what we can do for you. It's not a hard pull. Let's help you get funded for those high risk industries. If you got a W-2, we're going to help you out. Because I'm seeing the comments, hey, I have a new LLC. We can help you out. Right? So just fill out the app. It's a no pull. We'll get our team on the phone call, and everybody could tell the individual stories on what we can do to help. I just dropped in the chat. There's a couple of people that said, hey, how do I hide a little utilization? I just dropped in the chat. How do you hide your utilization? Everyone's asking for the link on how to get qualified. I'm going to drop that in the chat also right now. So you just fill out the app, no inquiry, just fill it out. Let's see what we can do for you guys.
Absolutely. All right, Thomas.
All right, man.
Appreciate it.
I really appreciate it, guys. If anything I can do to help, I'm here. Let me know.
Good deal. Thank you so much.
Take care.
All right, you too. Take care for now.
All right, it's time for the good stuff, Hiram.
We have Laura here. Laura is our guys that you guys may know this or not. Laura and her team is our accounting team. They do all kinds of crazy, amazing things here for us. They make sure that they I stay in full compliance. And anything that I need and I consult with, instead of calling my attorney that's going to charge me $1,000 an hour, I connect with these young ladies here. Linda is here, Laura is here, and they know the system, guys. I mean, you guys want to liquidate some cards. You guys want to start really working in a really, guess what? Listen, the first 2 years of any business, the IRS understands that you are going to lose some money, right? You start your business, you launch your business, you start getting things going. There is going to be some money lost in the first year, but the second year, they also maybe have a little bit of expectancy that you can lose some money, but you start generating some money. But the most important thing is, okay, so if you went through Herman, if you got yourself $60, $80, $100,000 in credit cards, how in the world do I pay my GC that is asking me for $40,000 to fix this property? How do I go by it? How do I come up with a strategy where I'm not getting milked 10% or 20% on these advances or whatever the case that they're charging me? This is the team that is able to really help out and assist and make sure that you stay in compliance. You make sure that you have everything when it comes down to accounting, make sure that your bookkeeping is clean and all that good stuff. And that's what they do here for us. So without further ado, Laura, please help us out here. There's a lot of folks that are in here. They have $20, $80, $100, $200,000 in credit cards. And they want to know how they can pay for things that don't accept the plastic and where they can utilize this money and really get that bag and start moving that money over to where things that don't take plastic, they can now pay with cash.
Okay, so there's two methods really to look at when you're doing that. And the one I'd like to talk about first, and probably the most, is how to liquidate that credit card in a simple method. With your accounting software, the one I'm talking about tonight is QuickBooks Online. Mm-hmm. And QuickBooks Online is created by Intuit, and Intuit has been around for a couple of decades. They do TurboTax, they do Mint, they do all kinds of financial software. They're known in the industry. They're secure and they're safe. Mm-hmm. So if you've got yourself a new business and you have your credit cards and you're ready to liquidate those, the first thing you want to do is sign up with Intuit for subscription. And the software has different levels of packaging. They will tell you which ones are available and which ones aren't for the purpose of taking credit card payments, like you're going to take payments from your customer. And you'll want to use one of those two mid-level ranges of the subscription. And the next thing you need to do is during the setups for your company is you're going to want to make sure that you connect your business bank account to QuickBooks. And what that does is create a secure tunnel where QuickBooks talks directly to your bank. It feeds every line, every transaction that goes through your bank, it feeds into your software for your accounting. It does a couple of things when that happens. It makes your record keeping much easier because you don't have to do a bunch of typing. It's just accept, 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 and this looks right. The second step that you need to do is allow yourself to take payments from your customers. If you're a retail business, you already know what that means. Merchant services, you have a point of sale system maybe. If you decide to use QuickBooks to take payments, there is no contract for that. You can take one payment a month or one payment a year, and you don't have to pay extra. You simply pay for that QuickBooks subscription. Once you have gone through the setup process, and it's the process for setting up, it's a guided setup through the software online. If you've ever used TurboTax, you probably are familiar with it. And if it's something that you want help with, we're here for you. We can do it. We can help you. If you have questions, we can help with that. If you want somebody to be a little more hands-on and help you with it, we can do with that too. Once you have your setups done and you want to move forward with liquidating that credit card, the first thing you're going to do in QuickBooks is create an electronic customer record for yourself, you, the owner of the business, as a customer for the business. Once you've created that customer with your email address and your contact information, you're going to create an invoice, basically asking yourself to pay a bill as if you were a customer. You're going to send yourself that invoice by email. Then you're going to take these credit cards that you want to liquidate and you're going to pay that bill. And once the bill is paid through QuickBooks, QuickBooks is going to send you an email that says you've got money in the bank. So that's what it's going to be. With QuickBooks, the subscriptions are pretty easy to find at intuit.com. they are $50 a month for the Essentials plan and $80 a month for the Plus plan. Bookkeeping is super important for your business. Even if you think you're only doing a small amount of sales and a small amount of transactions, you've got to get that bookkeeping set up from the get-go. Otherwise, it's a really big penny to pay somebody like us to take care of that box full of receipts. If your knowledge for bookkeeping can grow with your company, you will do much better than trying to jump into it at a later date. The rates. Go ahead.
I want to interrupt you really quick here.
Yeah.
So I think this is very important that a lot of people know. So you've gone through Herman, you've gotten yourself $60, $80, $100,000 in credit cards. So now that you have $60, $80, $100,000 in credit cards, you got 0%. From the moment that you activated those cards, it's 0%. That's when it's the clock starts. You may have 12 months, 18 months, 24 months. So that means, if Laura, if you can cover this very, very quickly, what is the cost of the transaction? You already have 0%. You don't have to pay a 24%, 29% for a credit card that you're going to get in advance on. They're going to send you a check. So what is the charge for this? If you were to say, okay, I got my QuickBooks set up, I got myself as a vendor in QuickBooks, and then what is the charge that's going to be once I go and process that credit card through QuickBooks, QBO?
You're going to put yourself in as a customer, and that fee is 2.9%. It's a little bit less if you actually have a card reader and you can do a physical chip card. It's a little bit like 2.4% maybe, but it can make a difference. If you're going to be a retail business and you're going to do that, then I would do it with a chip reader. But processing it through the invoice is 2.9% plus 25 cents, I think, per transaction. You can also pay your vendors. That's the second thing to talk about.
Yes.
If you have a vendor like a subcontractor that's doing business for you and he doesn't take credit cards, QuickBooks has applications that they integrate with that will allow you to use your credit card to make payments to that vendor. And I think it's Melio is one of them. And with Melio, you enter your credit card, you link it up, kind of like a Cash App or PayPal, and you either the person you're paying will agree to put their bank information in on their end to receive an electronic funds transfer, or Melio will send them a paper check. Either way, you're getting billed to your QuickBooks. You're getting billed to your credit card, and you're making a payment to someone who doesn't normally take a credit card. Melio, however, does also offer the 2.9% fee for using a credit card in that manner. So you can pay for free with an electronic funds out of your bank. But if you're going to use a credit card to process that payment to a vendor that doesn't normally take credit cards, you will cover that 2.9% fee.
Perfect. So, okay, so I'm looking, Hiram, I'm looking to purchase 6 trucks. I have $120,000. Guys, those of you guys out there that are looking to purchase trucks, right? You get $120,000 here from us. Each truck is approximately $35,000. And then at that point in time, we then move you on to getting yourself the trucks that you need. So we get 3 trucks at approximately $105,000. We got another $15,000 to be able to work with overhauls, to work with fuel, make sure that truck transports from Philadelphia all the way to California. At $120,000, guys, if we're looking at a 2.49 anywhere from up to 2.9, that means that I've only paid 3% on this money that I already have 0% using OPM method. So what I like about this a lot of times is because as long as you set yourself up in as a vendor in your QuickBooks, which is not going to cost you a lot of money, right? What monthly? What does it look like?
$50.
QuickBooks is $50 a month.
50
for
bucks.
the essentials. Mm-hmm.
Okay, so $50. You go to Plastique, they're charging you 7.5. Supposedly, they say they got a 2.9, but they're charging you a 7 point by the time you're said and done. $100,000, let's be real honest, guys. A lot of credit card companies are not looking to release $100,000 because they know that there's something there. So we got to make sure that we are looking at a 75% to approximately 80% of that money that you can liquidate. So if you have $100,000, that is $75,000 to $80,000 that you can liquidate. The more higher that you have on credit cards, the better it is for you. But one of the most important things for you to realize is when it comes down to you running these transactions and doing this, you want to stay in compliance. Is there any type of Laura, when you set yourself as a vendor, at the end of the year, when you're lowering your liabilities, you're talking to your accountant, you've taken that money, you've put it through as a vendor. I'm myself as a vendor. Is there anything that I have to pay at the end of the year? And how am I running this transaction through my QuickBooks?
If you're setting yourself up as a vendor, there is a $20,000 cap before Emilio will start asking for your taxpayer identification number, which would be your social if you're a sole proprietor, or it would be your FEIN if you've incorporated. You know, what they're doing with that number, I can't say. I don't know if it's for national security reasons that they're tracking it, or is it actually for a tax purpose? But it's up to you as the business owner to report income as income. And the 1099s are available if that applies to your business.
Okay. So I got a quick question. Some people are saying in the chat, like, hey, doesn't this look like income when I liquidate the car and it goes into my QuickBooks or whatever? What should I do? What are my options here?
It does. It has to do with how you code your invoice. So what you need to do is make sure you're doing an owner draw and an owner investment.
Got it.
Say that one more time.
Love that.
Say that one more time for them, Laura.
We're not coding it to sales. You are an owner of the business and you're taking a draw out of your business.
Did y'all get that, guys? I hope y'all got that.
When you turn around and put it back into your bank as cash, because this is what we would call a four-legged transaction, right? So you have two legs in the beginning where you're accepting money from you yourself, the customer, and then you have the second two legs where you are taking that money and putting it as money in your bank. And that's an owner investment.
I just learned something new tonight. Mind blown.
Guys, this is secret sauce right here.
That's a secret sauce. I didn't know that. That's a good one.
And then
don't worry, guys. The call is recorded. We're gonna send this out to you. That was a good one.
Yes. So one of the most important things. So I want to reiterate again one more time, because I think that at the end of the year, listen, you take $60,000 out of a credit card and you're putting it right back into your business, right? Forget about Best Buy with that big old screen TV in Mexico vacation. Assets later on, especially depreciating assets like vehicles and everything that you are, and Laura will tell you as an accountant, depreciating assets, we don't need to jump on there. That's something that comes later on. But appreciating assets, like something like your business that is going to continue to grow, you know, you start at $5,000, $10,000, you start moving into $20,000, $50,000 into revenue. Good night. We start moving in a direction that your business can really strive. So when it comes down to, okay, I took out owner withdrawal, I invested money into my business, took out an owner withdrawal, and now I'm moving forward in the direction that I need to be. Now we can start looking at other types of loans. But right now, when it comes down to, let's say, the accountant at the end of the year, what are they looking to complete and connect with the accountant and say, okay, this is an owner withdrawal, or this is an owner investment and an owner withdrawal? Is that something that we have to sit with our accountant and kind of explain this, or is that something that QuickBooks will be able to relay that message to them when it comes down to filing taxes for the business?
Ultimately, both of those transactions hit what we call an owner's equity account. And if you draw the same amount that you invest, it washes into a zero.
Got it. Got it. Perfect. Beautiful. All right, guys, put the questions there. I mean, this is a lot of knowledge that we're dropping here tonight. All right. It was very difficult for me to get Laura here tonight. She's super busy. A big old book of business here, right?
I got a couple questions. I'll just shoot them out to you. So what's the max that I can liquidate at once?
That is going to be dependent on your credit card. You'll have to read your terms on your credit card. There is no set number.
Oh, good. Okay, that's a good question. This was for someone else. How do I sign up for truck funding? If you want to sign up for truck funding, we dropped the link 100 times in the chat. Any type of funding, any high risk industry, low risk industry, we dropped that link. I just dropped it again. Click that link. We can help you get funded. So whether it's trucks, whether it's real estate, dare I say cannabis, Hiram, we'll figure it out.
Yeah, that's going to be Thomas. If we can, if you guys are in CBD, cannabis, or whatever the case is, listen, it's all red tape. You're not going to be able to finance like a $4 million farm unless you have a license in that state. However, there are the possibilities of getting, if you have your license, you have some sort of experience in that field, and you are able to maybe do a business acquisition. then these lenders will be looking at you, right? We have 2 lenders that'll do it out of in the United States. So yes, it's doable. Get your bag, get the money, get what you need. And then one of the things that you really need to take advantage of is once you get that, don't go ahead and get a $50,000 loan because that's all you need and that's all you've accounted for.
Right.
Remember, you have the expenses of an attorney, you have the expenses of a bookkeeping and accounting firm that'll be able to assist you and help you and take you to the next level, because you have to stay in compliance in everything that you do when it comes down to a business. Just like you've cleaned up your credit, you got your credit all good, ready to go. You need to be able to have everything in compliance when it comes down to your business, because you are being looked at with a tremendous microscope, in the first 2 years.
Okay, I got another good one. So we sign up for QuickBooks as a vendor and a customer, and then just pay ourselves with the credit card, correct?
There's 2 different ways to approach it. I think the most simple way, if you're going to do it, is to sign yourself up as a customer. You send yourself an invoice, a customer invoice, and then you take your credit card and you pay the invoice through the email link that's provided by QuickBooks. The vendor you would want to set up if you want to use your credit card to pay somebody that doesn't typically use or take a credit card. So if you're going to liquidate your own card, you set yourself up as a customer. If you're going to use your card to pay someone who doesn't normally take a credit card, then you would set them up as a vendor.
Perfect. So I have one thing that I want to let you guys know on this here. There are some credit cards that don't allow you to do this. There's some a majority of them do, right? But a lot of them don't, or a few don't. You can't go ahead and open up your credit card. Let's say you get a $50,000 American Express card, and you just go in and immediately try to do this transaction. It's not going to work.
No.
They want to see that you purchase a bubble gum double mint. You guys remember double mint? Or you go and get yourself go to the gas station, get yourself fuel or whatever it is for your business. Because as soon as they see that you're trying to run this and do certain transactions and running a card for $30,000, $50,000, it just seems like something like, okay, why are you guys doing this? We have an advance. We can give you a cash advance at 20-some%, but you got to follow the right prompts. You got to follow the right steps. We want to make sure that you stay in compliance with everything that you do. Never try to go off the grid. You want to make sure that you have everything set up correctly. You're going and following the process. Make sure terms and conditions are as follow, and then you start moving in the direction that you need to, right? QuickBooks, maybe consider Melio. It might go down the right path. Is that right, Laura?
Right. So Melio is an application that integrates with QuickBooks, and that would be used for making your vendor payments. If you choose to use QuickBooks as your merchant services, which is your credit card processor to receive payments from customers, then that's how you would create yourself as a customer to liquidate that credit card by paying yourself and balancing that equity account.
Got it.
Excellent, excellent. So listen, guys, real quick, before we let Laura go, because you guys are on the call, you're going to get the recording. We're going to send a text message blast or email. You're going to get the information. I just dropped Divvy in the chat. So you guys are like, hey, what's Divvy? Divvy is a no personal guarantee credit card. I just want to give you guys an extra gem for showing up tonight. We appreciate you. That card right there, our clients are getting $30,000, $40,000, $50,000. They don't look at your credit at all. They just check a couple of things. They want to make sure you have a business checking account that is 3 months old. They look to see what's sitting in your business checking account. Based on that, right, they're going to give you funding. No personal guarantee. They don't care what's on your credit. You can have a 400 credit score. They don't care. They're going to see if you have a business checking account. They want to see if you have money sitting in there. And based on that, their underwriters are going to give you funding. So I just dropped that link in the chat for you guys. Wanted to give you an extra gem. The other gem I gave you was a link to the banks and what bureaus they pull from. That's another gem we just gave you guys. I only give this in my mentorship. I'm giving it to you guys right now. And don't worry, if you miss it, we're gonna text it all out and email it all out to everybody so you have this information. We want to thank you guys for coming on tonight.
Guys, so tonight we had two of the most important people in my life that we do business and conduct business with. Laura and Linda and her team, they help us out tremendously. And then Thomas as well is one of those funders and those lenders that really has been working with us for the longest time, and they know what's going on. So I truly appreciate Laura and Linda. Thank you for being here tonight. Thomas as well. He's out, but any questions that we can maybe answer for you, feel free to let us know. One of the most important things, we want to get you guys the money that you need, getting you guys over to the next level, and really, really, really taking advantage of all these opportunities that we have to offer you.
I know there's 600 people in the chat right now, so there's a lot of questions we didn't get to, right? Don't worry, click that link that we dropped. The team, if you have any questions, get on a call with the team. We're definitely going to answer your questions for anything that we missed. We really look forward to helping everybody. All the links that I drop in the chat, don't worry, guys. We're going to send them to everybody that showed up. We'll take care of you. You're not going to miss anything. We appreciate you guys. Thank you so much. Laura,
super
thank
humble.
you. That was a crazy gem, Laura. Thank you so much for that. Because I do manufactured spending. You're about to really help me get some points for my traveling. So I appreciate that. Thomas, you're amazing. Craig, Big Dog, we appreciate you. Yuritsa, Linda, Hiram, as always, thank you so much.
Thank you so much. Thank you guys for the opportunity.
Thank you so much.
Yeah.
Good night, guys.
Have
Take care.
We'll talk soon. Good night, guys. Thank you.
Bueno. All right. Take care. Bye now.